good? It's your boy Don P, and we're here today with episode 2 of the Classroom. So today's topics are the three indexes that are most commonly known within the US. So today we're going to start with the Nasdaq. So the Nasdaq tracks 3,000 tech companies. So, your tech companies, like I have at the bottom, Google, Nvidia, Microsoft, Meta. It's the most volatile of the three. So this one, I've actually traded this one before when I used to day trade. When they say it's volatile. And it's also market cap weighted. All right. What does that mean? So depending on how a company moves is based off its market cap. So when you see that Amazon or let's say Apple just became a $1 trillion company. Microsoft is a $1 trillion company. Amazon just crossed the $2.5 trillion market cap. So when those companies' market caps increase, that's what moves the Nasdaq. So if they, decrease in market cap, then the Nasdaq will go down. So next is the Dow Jones. You'll hear, I know for my day traders, US 30. This is the Dow Jones Industrial Average. So the Dow Jones is the oldest of the three indexes. This one has been around for some time. This one is price weighted. So Nasdaq was market cap weighted. This one is price weighted. Weighted. What does that mean? Price weighted is just saying if inside the Dow Jones, if it has a company that has a high stock price, such as Goldman Sachs, I think Goldman Sachs stock price, it's a couple $1,000s. I think like 5, 6, $7,000. If Goldman Sachs takes a big dip and it goes, let's say, from 7,000 to 3,000, the Dow Jones is going to feel that. So this one is more based off stock price. The Nasdaq is more based off overall market cap of the company. All right. So this one just tracks 30 of the most established companies. And I know, usually when you hear the Dow Jones or US 30, you hear blue chip. So it's just those established companies, those blue collar companies, your Home Depots, your McDonald's, your Coca-Colas, your Walmart, those companies that have been around for decades. Next is the S&P 500. So this is one that probably everybody is familiar with. When you hear on the news and they say the market is down or the market is up, or when they say the market, they're talking about the S&P 500. And S&P is just short for Standard and Poor. So the S&P 500 tracks 500 companies. So I think the cool part about the S&P is that, any of the indexes in particular, is that if you're a company within one of these indexes and you're not performing, they can remove you. So if you're not doing your job, you can, let the door hit you where the good Lord split you. All right. So the S&P is a free float capitalization weighted index. That was a lot. But it's a free float capitalization weighted index. What does that mean? It is based off the percent that the S&P has within a certain company, right? So let's say, for example, the S&P has 12% stake in Apple, 8% stake in Microsoft, 6% stake in Tesla, and so on and so on. Because Apple is this biggest percentage. If Apple tanks, then the S&P 500 is going to feel that. But versus those lower companies that don't have that much of that, the S&P doesn't have that much of percent in. Say a company that has like 0.1, if they tank, then S&P not gonna feel it. But those bigger companies that they have bigger investment in, then S&P is gonna feel that, good or bad, right? So that'd be companies like Apple, Amazon, Nvidia, Tesla, United Healthcare. I believe Procter and Gamble is in the S&P 500. uh, you know, a lot of companies that we know, the Home Depots, they're also in the S&P 500. So the main difference between the three are how they're weighted. So like I said, we have free float and we have market weighted. That's really the main difference because you will see an Apple in all three of these. You will see, I believe you'll see an Amazon. I don't think Amazon is in the Dow, but I know a Home Depot, like Home Depot is in the S&P and the Dow, but not in Nasdaq because it's not a tech company, right? I believe Microsoft is in all three. I think Nvidia is in all three. So they have some similarities, some differences, but overall, this was just to bring awareness to the indexes that you might or may have heard of, when watching the news or anything like that. So that wraps up episode 2 of the classroom. Just wanted to bring some attention to the S&P 500, the Nasdaq, and the Dow Jones, the top three indexes in America. So y'all have a great day. Thank y'all for tuning in. Be blessed.